Namaste. Welcome all of you. Welcome all of you again. This is our this is our 11th lecture in the series of online lectures. See, learning accountancy is a step-by-step process. It is a step-by-step process. See, you will be able to understand this lecture only if you have watched my earlier lectures or my lecture number 10 before watching this lecture, so that your understanding would be clear. Okay? Now let's move with the interesting thing. In my last lecture, I had asked one quiz. It was, if the bills receivable dishonored adjustment has been given, then where it will be recorded, and the options given were, it is added to the bills receivable, it is deducted from bad debts, it is added to sundry debtors, or it is credited to profit and loss account. And the correct option is obviously option C. That is, it is added to sundry debtors. Bills receivable dishonored, if it is given in the adjustment, it is added to the sundry debtors. And let's see how many students has given the correct answer. See, it's Shawnee Penker. Very good, Shawnee. Shawnee has given the correct answer. Very good, Shawnee. So Shawnee is the winner of this quiz. We are learning Bookkeeping and Accountancy Standard 12. We are learning lesson number 1, that is Introduction to Partnership and Partnership Final Accounts. And we have covered these topics. And as per competency statement also, we have covered all these topics, and now we are learning, that is, how to solve the problems regarding the financial results of the business. We have already learned the methods of capital account. There are two methods of maintaining the capital accounts of the partners, either by fixed capital method or fluctuating capital method. Okay. In fixed capital method, you have to maintain two books of accounts, that is capital account and current account of the partners. And if you are maintaining the fluctuating capital method, then you have to maintain only one all-inclusive book of account, that is capital account. What we learned in our last lecture, we learned solving illustration number 1, that is from page number 23 to 27. And what we are learning today? Today we are learning partnership final accounts, illustration number 2, that is given from page number 27 to 29. Now let's move to the problem. See, final account consists of trading account, profit and loss account, and balance sheet. Trading account gives us gross profit or gross loss. Then it is transferred to profit and loss account, which gives us net profit or net loss. Then that whatever it is, either net profit or net loss for that accounting period or financial year, it is carried to the balance sheet. And balance sheet gives us a statement showing financial position of the firm on a particular day in the form of assets and liabilities. See, you must remember whatever you have learned in standard 11 as well as whatever you learned in topic 1, that is of maintaining the capital accounts, maintaining the partners accounts, partners capital account. There are different adjustments given in the problem and you have to solve the adjustments. See, that is when to debit and when to credit an account. See, these were the adjustments regarding the bills receivable, bills payable, bad debts and all. Okay, you have to remember these adjustments forever. Now, let's go to the illustration number 2. Okay, that is of Shilpa and Katrina. Partnership final account, that is of Shilpa and Katrina. Now let's read the problem. Okay, this is your problem, and you were supposed to make one column for posting. Posting means you will mark whatever entry is given in the trial balance, you will mark its posting. Okay, where you will post it. And I had told you to make one column against the particulars. Okay, and now let's see how the posting can be done. See, let's start. Land and building. It is an asset. Furniture, asset. Sundry debtors, asset. Stock. Now let's see. Stock. It is of the date 1st April 2018. And this is the trading and you are required to prepare trading and profit and loss account for the year ended 31st March 2019. And the trial balance is given as of the date 31st March 2019 in the books of Shilpa and Katrina. Okay, 31st March 2019 the trial balance is given, and this stock is of 1st April 2018. It means obviously it is an opening stock. Okay, so the opening stock goes to trading account debit side. Bad debts goes to the profit and loss account debit side as per the formula. In my earlier lecture also I had told you the meanings of these terms. Okay, A for asset, L for liability, TD for trading account debit side, TC for trading account credit side. Then PDF means profit and loss account debit side formula. Only PD means profit and loss account debit side, and PC means profit and loss account credit side. Okay. Now next, printing and stationery, profit and loss account debit side, wages trading account debit side, salaries profit and loss account debit side, carry again word trading account debit side, sales return. See, sales return means what has been done, whom we have sold, they have returned as the good. So it is what? It is what? Minus sales. Minus sales means you have to deduct that much of amount from the amount of sales. Okay. Then drawings. Drawings of Shilpa and Katrina. See, there are the two partners, Shilpa and Katrina. Okay. Now, what should be done by the value of the drawings? See, the value of the drawings is deducted from the partner's capital account. Okay, and where the partner's capital account is maintained, see, it is not. See, the book is not following maintaining of the separate partner's capital account. They are maintaining the partner's capital account in the liabilities itself. Okay, so you have to deduct that much of value from partner's capital account, which is maintained in the liabilities. Okay, drawings. Drawings means withdrawn done by the partner. Katrina, same partner's capital account in the liability side. Discount. See, this discount is given in the debit side. Okay, this is the debit side. This is the debit side. And this is the credit side. Now see, this discount is given in the debit side of trial balance. Discount in the debit side means discount given. It is an expense. Okay, so it will come to the profit and loss account debit side. Advance given to Shahrukh. See, Shahrukh may be their employee, or Shahrukh is somebody to whom the advance has been given. So for the time being, it is an asset. Okay, it is an asset till the services has been not been availed from Shahrukh. Okay, then cash in hand, asset, cash at bank, asset, interest. See, interest in the debit side of the trial balance. Then obviously interest paid. It is an expense. Profit and loss account debit side. Commission, again it is given in the debit side of the trial balance, means commission is paid. So it is an expense. Profit and loss account debit side. Royalties. See, here again it is only royalties is given as in our registration number 1. Means these royalties are royalties paid for purchasing or production. Okay, so manufacturing. So these are the royalties. These royalties will come to the trading account debit side. If it would have given that royalties on sales, then it would have come to the profit and loss account debit side. But here only royalties is given, means trading account debit side. Purchases, obviously trading account debit side. Then capital. Shilpa's capital. See, here this book is not maintaining separate capital accounts for the partners. So they are maintaining the partners capital account in the liabilities itself. Okay. So Shilpa's capital, which is given on the credit side, Shilpa's capital will come to the profit and loss account. Sorry, will come to the partners capital liability side. Katrina, partners capital in the liability side of the balance sheet. Okay. Bills payable, obviously liability. Bank overdraft. What is meant by bank overdraft? See, bank overdraft is the facility given to the business by the bank on their current account to use in business as working capital to withdraw more money from his current account, which sometimes has been mortgaged by the business. Okay, that is called as bank overdraft. Then purchase return. What is meant by purchase return? See, we had purchased something from somebody and we had returned it. Okay, so our purchases will decrease by that much of amount, right? So purchase account, what to do for the purchase account? That much of amount we have to deduct from purchases. And where the purchases are recorded? Purchases are recorded in the trading account debit side. So purchases return will also be recorded in the trading account debit side. And that much of amount will be deducted from purchases. Sundry creditors, liability. Bank loan, liability. Interest received. See, here received is properly given. Okay, received means it is profit and loss account credit side. Okay, why? Only sales. Sales is the only thing, only item which is the direct income. Okay, and interest is an indirect income. So indirect income is recorded in the profit and loss account credit side. Only sales is recorded in the trading account credit side because it is only direct income. RDD. RDD, what to do for the RDD? See, RDD is to be noted in profit and loss account as per the formula which I have taught you in last lecture. Sales, trading account, credit side. I will wait for 2 minutes. Till the time you have to record this or mark these postings. See, this carriage inward. What is meant by high carriage inward comes to the trading account debit side because carriage inward is the transportation cost. Carriage inward is the transportation cost on purchasing of raw material. As the purchases are recorded in the trading account, so carriage inward is also recorded in the trading account. I hope you have noted. Okay, now let's see. In this problem, the profit sharing ratio has not been given. Right? Profit sharing ratio has not been given. And the capitals are same. Okay? The capitals are same as well as the profit sharing ratio has not been given. So, if the profit sharing ratio is not given, it is assumed that it must be 1:1. Means equal. Same. 50-50. 50-50%. According to Indian Partnership Act 1932. Okay. Now, one more thing you must have recorded. In this problem, there is no any internal adjustment. See, there is no any internal adjustment has been given. That is, there is no any hidden adjustment. Hidden adjustment would be on which items which we saw in last lecture. Which are those items which are given in the hidden adjustment? For example, any 10%, for example, 10% investment or advertisement expenses paid for 6 months, 5 months, 9 months, like that. In this illustration, there is no hidden or internal adjustments. Okay. Now let's see the adjustments, the effects of the different adjustments. Okay. Now, what is the first adjustment? See, the stock in hand was valued at rupees 58,000 on 31st March 2019. See, it is the stock on 31st March 2019 means it is a stock on the last day of the financial statement of prepared. Okay, so it is a closing stock, and where the closing stock is recorded, it is recorded in the trading account credit side. Okay, note this. its second effect is recorded in the asset side, right? It is as a closing stock, that is current asset. See, all the adjustments has two effects. Okay, see, but the effect of closing stock is not mentioned or not noted anywhere in the. Now, let's move to the next adjustment. Okay, the next adjustment is of outstanding expenses. See, what is meant by outstanding expenses? Outstanding expenses means the expenses which have not yet been paid. Okay, so the expenses which were due but has not been paid. Okay, so it is a liability basically. Till when it was not paid? It was not paid till the closing of the books of accounts. Okay, so which are the two outstanding expenses? Here it is royalties and wages. See, both the royalties and wages comes to the trading account debit side. Okay, so obviously the effects of the adjustment will also go to the trading account debit side. Okay, remember trading account debit side. So royalties, unpaid royalties were rupees 1,500. Okay, so we will make one mark against royalties. Okay, royalties. Okay, we will make one mark. And unpaid wages are rupees 800. Okay, so we will make one mark against wages also. Okay, we will make one mark against wages also. Wages unpaid will rupees 800. Okay, we will add those because those are outstanding. Means we have not yet paid. Okay, so those were due. So we will add those that much of amount to the trading account debit side. And what is its second effect? Its second effect, as we have not paid but those were due. Okay, so it is a liability. So we will add those to the those two items as outstanding expense to the liability. Liability. Okay. Now, salary is paid in advance to staff rupees 2,000. What does this mean? Salary has been paid in advance to somebody. Okay, it means advance has been given. Advance money or extra payment has been paid, but still services from that employee has not been availed. Services has not been taken. So for the time being, it is an asset. Okay, for the time being, it is an asset. Okay, because he will either return the money or he will provide service later on. Okay, so whatever is paid in advance, okay, or prepaid, it is an asset. Okay, so that much of amount for the time being, as we have not received the services. Okay, so it is an asset for us, so we have to deduct that much of amount. Okay, for this period, because we haven't availed or we haven't received his services, so we have to deduct that much of amount from profit and loss account debit side in the respective item, which is the item salaries. So we will make one mark against salaries. Okay, earlier we have made the marks against royalties and wages, and now for this adjustment we will make the mark against salaries. Okay, next, create a provision for bad debts rupees 1,000. Okay, this is a new provision because this is a new bad debts because it is given in the adjustment. See, whatever is regarding bad debts and already whatever is given in the trial balance, it is old. Okay, it is old adjustment. Old, not adjustment, it is old. And whatever is given in the adjustment regarding bad debts, IDD, provision for doubtful debts, reserve for doubtful debts, okay, that is new. Okay, and what is done for the new adjustments? New items regarding bad debts. See, first thing that whatever is new, you have to add to the profit and loss account debit side to the bad debts as per the formula. Okay, as per the formula. So what we have to do here? We have to provide new bad debts. New bad debts have to be provided. Okay, so it is added to the bad debts. So we will make one mark against bad debts. So as per the formula, and those new bad debts are deducted from the debtors. Okay, so we will make one mark against debtors also. Okay, this one mark against debtors. And next, reserve for doubtful debts at 3% on Sundry debtors. Okay, so this is again new reserve for doubtful debt, new RDD. So new RDD is added to the bad debts as per the formula. Okay, so again bad debts we will make a second marking, and that much of new RDD is reserved. Okay, so reserved means we are assuming that this much of more bad debts we won't, this much of more amount of debtors we won't get money. Okay, so we are reserving that much of loss. Okay, so that is that much of amount we have to deduct from debtors. Okay, where the debtors are recorded in the asset side. So one more adjustment against debtors. Okay, and one more adjustment we had marked against bad debts. Now depreciate land and building by 5% and land and building by 5% and by furniture 10%, means land by 5% and furniture by 10%. Depreciation is an expense. So where do we record the depreciation expenses? In the profit and loss account debit side. Okay. So and we have to deduct that much of amount, depreciation amount, from respective assets. Which are the assets? Land and building. So we have to deduct that much of amount from assets. So we have to note against those respective assets. Which are the assets? Land and building and furniture. Okay. So these are the marking for posting regarding the adjustments. Now let's see how to solve the problem. See, first of all, you have to do the totaling, okay, and check the totaling, and then you have to record it to the, post it to the trading account first, then to profit and loss account, then to partners capital account if it has been asked, or then in the balance sheet. Okay, in this way we have to prepare the answer. This has the answer shown as per the book. Now let's start solving the problem. It is the problem of partnership annual accounts. The names of the two partners are Shilpa and Katrine. Okay. Now we have drawn trading and profit and loss account. Okay, and we have also drawn balance sheet format. Okay, so the basic items which are always there for the trading account, like opening stock, purchases, list purchase returns, sales, and closing stock, we have already mentioned over there. Okay, and similarly for the balance sheet we have written the headings of the liabilities like capital, general reserve, long-term liabilities, current liabilities, and similarly for asset side like fixed assets, investments, current asset, like that. Okay, now we'll start to do the posting of trial balance items first. Okay, now the first ever item, that is land and building, that is an asset of rupees 37,800. Let's start posting fast. Okay, land and building. Though I am writing in short form, you are always required to write in the full form, right? PULDING. Okay, otherwise I will also write in full form. Okay, see, there is an adjustment for land and building, so we have to write the amount in the inner column. The amount of land and building is rupees 37,800. Okay, next, furniture. Furniture is again an asset and there is an adjustment on furniture. Okay, so we have to write the amount of the furniture in the inner column after leaving one line for the adjustment of land and building. We will write furniture. Okay, the amount of furniture we have to write in the inner column, that is rupees 17,250. Then next, sundry debtors. See, sundry debtors are again assets. Those comes under the category of current asset. Sundry debtors, there are many adjustments. Okay, so we will write the value in the inner column. Sundry debtors. The amount is rupees 40,000. Okay, next. Then bad debts. Bad debts are written in the profit and loss account debit side as per the formula. So profit and loss account debit side, we will write over here bad debts. See, there are adjustments on the bad debts, so we will write the bad debts in the inner column. That is rupees 400. Okay, we forgot to write about the stock. See, this is the stock which is given of the date 1st April 2018. See, the year ends on 31st March 2019. It means the stock value on 1st April 2019, that is the opening stock. Okay, so write the opening stock, there is no any adjustment. Trading account debit side rupees 65,000. Okay, then bad debts we have written in the inner column. Then printing and stationery. Printing and stationery, no any adjustment, will go to the profit and loss account debit side. See, bad debts had some adjustment, so we will write printing and stationery over here. Printing and stationery. Okay, printing and stationery amount is rupees 4,000. No any adjustment, so outer side. Then wages. Wages goes to trading account debit side. There is one adjustment, so it will go to trading account debit side to wages. How much of rupees? 3,000. There is one adjustment, so we will write in the inner column. Okay. Next, salaries. Salaries go to the profit and loss account debit side. See, wages are given to the workers. Okay, workers was in the factory. So, wages are always recorded in the trading account. And salaries are given to the employees. Employees was in the office. So, salaries comes in the under the profit and loss account because those are expenses which are not recorded for trading and manufacturing. Okay, those are the office expenses. So, salaries. There is an adjustment on salaries. Okay, so we'll write the salaries rupees 5,000 in the inner column. As there is one adjustment, we will write in the inner column. Then carriage inward. Carriage inward are trading account debit side rupees 4,000. No any adjustment. Carriage inward. How much of rupees? Rupees 4,000. No any adjustment, right? Carriage inwards rupees 4,000. Okay. Next, sales return. Sales return are always deducted from the value of the sales. By the time we haven't reached to the value of sales, meanwhile we write over here less sales returns. Okay, we write less sales returns. How much is the value of sales return? It is rupees 2,000. It is written in the inner column. See, the values in the inner column are written. See, it is the value which is to be deducted. So it should be written in the bracket. Okay. Then it should be written in the bracket. Then drawings. Okay, drawings for the two partners Shilpa and Katrina. See, drawings are, as this illustration is not following to maintain the separate capital accounts, so the drawings are deducted from the partners capital account. Okay, and the partners capital account are maintained in the liability side of the balance sheet. Okay, so those are deducted from the partners capital account. So here we have to note it in the partners capital account. Okay. See, as so far we haven't reached to the entry of the capital. Okay. So we will simply write over here Shilpa. We will write the amount of the capital later on over here. List for the time being drawings. Drawings of Shilpa. Okay. How much are the drawings of Shilpa? Rupees 2,000. We will write it in the inner column. Okay, rupees 2,000. Okay. Next, See, the computer is not taking the bracket. Okay, so we'll write like this only. If the computer takes the bracket, it is not taking the minus sign. Okay, so we'll keep like this only. But you have to, when you are writing manually, you should write only in the bracket rupees 2000. Okay, then Shilpa drawing, then Katrina drawing. Same way, we will leave one more, like if suppose because we have to add the net profit to Shilpa. Okay, so we'll write in the next line, that is capital of Katrina. Okay, less drawings of Katrina. How much are the drawings of Katrina? Rupees 3000. 3000. Okay. Then discount. See, discount is given on the debit side of this trading account. Means discount is an expense. Okay. So discount is an expense which is noted to the profit and loss account debit side. So we write over here discount. Discount, how much discount has been given? Rupees 2030. 2030. Then advance given to Shahrukh. See, Shahrukh may be some employee, or Shahrukh is the person to whom the money has been given. Okay, and the services has not been availed from him. So for the time being, it is an asset. Till the date the books has been closed, it is an asset with us. Okay, so we will write in the current asset. Advance to whom? Shahrukh. Okay, advance to Shahrukh. Then rupees, how much rupees? Rupees 10,000. Okay, then cash in hand is an asset. Okay, how much is the value of cash in hand? It is rupees 20,000. Then cash at bank, again an asset. Cash at bank asset, rupees 8,000. Okay, then interest. Interest is given on the debit side of the trial balance. So interest is paid. So it is an expense. So we have to write it in the profit and loss account debit side. How much of interest has been paid? See, interest of rupees 1,000 has been paid. Interest of rupees 1,000. As there is no any adjustment. Okay, so interest of rupees 1,000 has been paid. Then commission, again on the debit side of the trial balance, means commission has been paid. So it is an expense. Again, trading account, profit and loss account, debit side. Commission of rupees 2,000. Then royalties. Royalties are trading account debit side. So royalties. Okay. How much of royalties are there? Rupees 50,000. See, there is an adjustment on the, sorry, royalties are rupees 2,000. There is an adjustment on the royalties. Okay, so we write the value in the inner column. Royalties. Then purchases. See, purchases goes to the trading account debit side, rupees 50,000. Okay, there is no adjustment, there must be an adjustment of purchase return. So we will write the amount of purchases in the inner column. Okay, purchases. Then, so far we have finished posting of the items in the debit side of trial balance. Next, credit side of the trial balance. First item is capital. Capital always has the credit balance, Shilpa and Katrina partners. Okay, so it will go to the partners capital account, or if you are maintaining in the balance sheet itself, then the liability side, the partners capital. Okay, we will write partners capital. Okay, Shilpa's capital. How much Shilpa's capital is there? Rupees 45,000. We write in the inner column. Okay, because we have to deduct the drawings. Shilpa's capital. Then Katrina's capital, again the same, rupees 45,000. Okay. Then bills payable. Bills payable is a liability. Okay. Bills payable. How much of bills payable are there? Rupees 17,500. No any adjustment, so the value will go directly to the outer side of the column, amount column. Then bank overdraft, again a liability. Bank overdraft, it's a liability, amount rupees 10,000. Okay. Then purchases return. See, purchases return, we have to deduct that much of amount from the purchases. How much of amount we have the purchases return? Purchases return, we have the amount of rupees 1,480. 1,480 we have to deduct from the purchases, that is less purchase returns. Okay. Then sundry creditors. Sundry creditors is a liability. Sundry creditors. How much of sundry creditors? How much of value of sundry creditors are there? Rupees 22,000. Okay, there is no any adjustment, so the value will go to the outer side. 22,000. Right? Then bank loan. Bank loan is a maybe a long-term loan. Okay, so we have to write over here in the category of long-term liabilities. Bank loan. Bank loan of amount of rupees 15,000. There is no any adjustment, so write in the outer column. Then interest received. See, received word is given here. It means it is an indirect income. So indirect income is recorded in the profit and loss account credit side. Okay, indirect income, that is interest received. Okay, how much of interest has been received? It is of rupees 1,500. Next, RDD. RDD, what should be done with the RDD which is given in the trading account? Sorry, which is given in the trial balance in the credit side? It should be recorded in the profit and loss account as per the formula. Okay, so what is the formula? Bad debts. Then in the formula, what should be done with the RDD? It should be deducted. Okay, less, but it should be deducted at the end after adding the other items. Okay, less RDD, which is old RDD, which is given in the trial balance. Always remember, this RDD which is given in the trial balance is called as old RDD, which must be deducted from the other items of the bad debts, from the bad debts. Okay, less old RDD. We write old RDD, which is of rupees 1,000. Okay. Then sales. Sales trading account credit side, rupees 1,20,000. Right? 1,20,000. Okay. So far we have completed the posting of all the items given in the trial balance. Now let's move to the items given in the adjustments. The first item is the stock in hand was valued at rupees 58,000 on 31st March 2019. That is the closing stock. And where do we record the closing stock? In the trading account credit side. How much of amount of closing stock it is there? It is of rupees 58,000. Okay. Then what is the second recording of the closing stock? It is an asset, current asset. Okay. So we'll mention over here what it is. Closing stock of rupees 58,000. Okay. Next, outstanding expenses. Outstanding expenses are recorded in two ways. First of all, in the profit and loss account debit side, right? We have to add it. First it is royalties and second it is wages. So it will go to the trading account debit side, right? Instead of profit and loss account debit, it will go to the trading account debit side. Okay, trading account, because both the items, royalties and wages, both are the items of trading account debit side. So it will go to the trading account debit side. We have to add. We have the wages, add outstanding wages. Okay, add outstanding wages. How much are the wages? Outstanding wages. Outstanding wages are rupees 800 and outstanding royalty is rupees 1500. Outstanding wages rupees 800 and outstanding royalty and outstanding royalty rupees 1500. Okay, outstanding royalties rupees 1500. Okay, and that is a liability, so we have to mention it in the liabilities also. Which liabilities? Current liabilities. Okay, what it is? Outstanding expenses Which are the two outstanding expenses? Royalties and wages are the outstanding expenses. How much of royalties are there? 1500. Outstanding wages rupees 800. Right? Then salaries paid in advance to staff rupees 2000. See, salaries comes under the category of profit and loss account debit side. It is paid in advance, means prepaid, and we haven't yet received the services from the employee. So for the time being, till the closing of the books, it is an asset for us because we haven't received his services. So we have to deduct that much of amount from profit and loss account debit side from the salaries of rupees 2000, right? So profit and loss account debit side, salaries are there, we have to deduct less prepaid or paid in advance. Prepaid means paid in advance. How much of rupees? Rupees 2000. Okay. Then it is an asset for us for the time being. So you can write over here prepaid or advance salary. rupees 2000. Okay, then the next important thing, right? See, create a provision for bad debts rupees 1000. See, this is given in the adjustment for the provision for bad debts. So it is a new bad debts, right? Because it is given in the adjustment. So what should be done with the new bad debts? The new bad debts must be added to the old bad debts. Okay, as in the profit and loss account as per the formula. How much of new bad debts? Rupees 1000. Okay, so we'll go to the bad debts and add new provision, right, for bad debts. Okay, how much is the new provision for bad debts? It is rupees 1000. 1000. So we will do the total of this first. 1000 plus 1400 is equal to 1400, right? Okay, then how do we do with the new bad debts? We have to deduct it from the sundry debtors. Less new provision for bad debts. How much of rupees? Rupees 1000, right? Then how much are remaining? 40,000 minus 1000 is equal to rupees 39,000. Okay, then and add reserve for doubtful debts 3% on sundry debtors. See, this percentage reserve for doubtful debts on the sundry debtors is to be calculated on this remaining value, means after the adjustments. Okay, so how much of reserve? 3%. So we have to calculate 3% on 39,000. How to calculate 3% on 39,000? 39,000 into 3 upon 100. Okay, 39,000 into 3 upon 100. So we have to calculate it. How much is the value of 39,000 into 3? 0, 0, 0, 0 will go. So 39,000 into 3. Okay, let's calculate it. 9 3s are 27. Then 3 3s are 9 plus 2, 11. 11. Then 1 0 will come over here. So how much is the value? 1170. 1170 is the new provision, right? So what is this? This is less 3% RDD. Okay, it is 1170. So we have to deduct rupees 1170 from rupees 39,000. So how much are there? 0, 3, 8, then 37. That is 37,830. So it is the value of the bad debts, right? So this RDD which we have calculated rupees 1170, that we have to, what we have to do? We have to add to the bad debts, right? Where were we? Okay. Now add 3% RDD, okay, which is new. That is rupees 1170. Okay. So how much is the total of rupees 1170 and rupees 1400? We have to calculate over here, right? That is 2570. 2570. Okay. And from 2570, we have to deduct this new RDD. Sorry, old RDD. How much was the amount of old RDD? It was rupees 1000. So what is the total bad debts value of the bad debts now? It is rupees 1570. Okay. How we have to calculate it for the bad debts? See, the bad debts which are old, which are given in the trial balance, which are written first in the inner column. Then new RDD or new provisions are written, which are added. Then new RDDs are added. Then old RDDs are deducted, which are given in the trial balance. Okay, so this is the final amount of the bad debts. That is 1570 rupees. Okay. Then depreciate land and building by 5% and furniture by 10%. First of all, we write the land and building, right? Less depreciation at the rate of on land and building, depreciation at the rate of land and building at the rate of 5%. 5%. Okay. See how we can calculate the depreciation by 5%. See, what is the value of land and building? Rupees 37,800, right? So we'll write one working note over here. Working note 1. Calculation of depreciation. Okay, on land and building. Okay, how much is the value of land and building? Rupees 37,800. 37,800, and we have to calculate 5%, right? So 5 divided by 100. Okay. See, we know the 10% of 37,800. How much are the 10% of 37,800? Simply we can calculate it is rupees 3,780, and 5% of 37,800 means 3,780 divided by 2. Okay, divided by 2. Okay, in this way we can calculate. So how much is the depreciation? 3,780 divided by 2, it is equal to rupees 1,890. Okay, it is rupees 1,890. So we will deduct that much amount from here. That is 1,890. So if we deduct 1,890 from 37,800, how much of amount do we get? Let's see. 0, 1, 9, 30, 35,910. 35,910. Okay, that is the amount of land and building after depreciation. That is the written down value. So we have to write that much of amount of depreciation in the profit and loss account. Okay. See, here we have the place to write it. Depreciation on, first on land and building. It is rupees 1,890. Okay, now we calculate the depreciation on furniture. Okay, next, depreciate furniture by 10%. It would be easy to calculate, right? Furniture, we have to depreciate it by 10%. Calculation of 10% is very easy. How much of value of furniture it is? 17,250, and 10% is rupees 1,725. Okay, so if we deduct 1,725 from rupees 17,250, then we will get 15,525. Okay, I am giving you time to calculate it, so I am going a little bit slower so that you can calculate by the time. It is 15,525. Okay, then this depreciation also we have to record 1,725 to depreciation, land and building and furniture. That is 1,725. Okay, so how much is the total of these two things? How much is the total? 1,890 and 1,725. It is 3,615, right? 3,615. Okay. So far we have completed posting all the adjustment, right? Now we will see whether we have taken anything to the outer side. See, many things we haven't taken to the outer side. 50,000 minus 1,480, right? It is 50,000 minus 1,480. Purchases were rupees 50,000. Okay, purchases were rupees 50,000 and purchase returns were rupees 1,480. So it is 48,520, right? 48,520. This we have taken to the outer side. Then wages, add outstanding wages. So 3,000 plus 3,800 is equal to add. We have to add. So 3,800. Okay. Then royalties plus add outstanding, right? So 2,000 plus 1,500 is equal to 3,500. Okay. So we have recorded all the things: opening stock, purchases, purchase returns, then wages, add outstanding, royalties, add outstanding, carriage inward we have recorded. Okay. And on the credit side we have recorded sales less closing stock. Sorry, sales less sales returns. So 1,20,000 minus 2,000 is equal to 1,18,000, right? It's very easy. 1,18,000. Okay. Now we have to do the calculation. See, we have to do the total. there was no any adjustment on the closing stock, it should be returned to the outer side, right? Okay, now we'll calculate 1,18,000 plus 58,000. Let's calculate. It becomes 1,76,000. Take your time and calculate it. Okay, 1,76,000. And we come to know that the total of this side looks like to be smaller than the total of this side. Okay, so we will do the same total. We'll write the same total over here, that is 1,76,000. Okay, and let's check how much is the total of this side. It is 1,24,820. Okay, 1,24,820. Say, then we have to calculate the gross profit. What we have to do? We have to deduct the total of the smaller side from the total of the bigger side. Okay, so we have to calculate the gross profit like this: 2 gross profit 80. Okay, so we will carry the gross profit to the profit and loss account credit side by to gross profit, carry it down, and here we will write by gross profit brought down. It is 51,108. Okay, now let's check whether we haven't taken anything to the outer side. Bad debts we have calculated, then depreciation we have taken. Okay, this is added and this old is deducted. Okay, similarly salaries prepaid will come to the outer column, and we have posted everything. So let's see, then we can come to know that total of the credit side is bigger than the total of the amounts of the debit side. Okay, so let's take this and let's see the total of this side. It is 52,680. Okay, so we'll write the same total over here, that is 52,680. Now let's see how much is the total of this side. Okay, let's see the total of this side. It is 17,250. 17,250. Okay, so we'll deduct this much amount 17,250 from rupees 52,680 to arrive to the net profit. Okay, 17,250 we have to deduct. From 52,680. Okay, and it is rupees 35,465. Okay, so 35,465 is the net profit, and we have to divide this net profit, distribute this net profit to the partners Shilpa and Katrina in the ratio 1:1, because it is not mentioned over here the profit sharing ratio. Okay, so we have to distribute it to the partners in the ratio of 1:1. 1:1 means same 50-50%. Okay, so to net profit, transfer to partners. Okay, capital. Okay, which are the two partners? Shilpa and Katrina. Okay. How much is the net profit? It is with 35,465. Okay, so we have to distribute it in the equal ratio. So how equal ratio means? Same. So how much is the value of 35,000? How much is the value? How much is the half portion of 35,465? It is rupees 17,732.50 paisa. Okay, but 0.50 paisa it is not easy to distribute. So we will give rupees 17,732 to Shilpa and we will give 1 rupee extra to Katrina. That is 17,733. Okay. So in this way we have distributed the profit to the partners. That is 35,465. Okay. That is the net profit. Now, what we have to do? Shilpa has withdrawn some money. Okay. So what is the, see, after deducting the drawing from Shilpa's capital, how much rupees are remaining? Rupees 43,000, right? Now, what we have to do? We have to give the net profit to Shilpa, right? Then we have to add net profit. How much is the net profit of Shilpa? Rupees 17,732. So if we add this net profit to the amount, the total is rupees 60,732. Okay. Similarly we do for the Katrina. Okay. Katrina has the amount rupees, capital amount 45,000 and she has withdrawn rupees 3,000. Okay. So after withdrawal of 3,000 she was having the capital of rupees 42,000, right? Now what we have to do? We have to give her the net profit. So add the net profit over there. Add the net profit. How much is the net profit? 17,733. So how much is the total? 17,733 plus 42,000. It is 59,733. Okay. So rupees 60,732 is the total capital of Shilpa and rupees 59,733 is the total capital of Katrina. Okay. Okay. Now, what we have to do? We have to check whether we have taken all the items to the outer side, right? We have to check whether we have taken all the items to the outer side and we have to do the calculations, right? We have to do the totaling and our totaling must be the same. The total is 1,87,265. Okay, 1,87,265. Then this total also must be same. 1,87,265. Yes, it's exactly the same. Very good. Our problem has been tallied. Okay, the total of assets and the total of liabilities. Now let's see, whatever we have solved is exactly matching with the solution given in the book. Let's see. Our gross profit was rupees 51,180 and here it is the same, rupees 51,180 as it is solved in the book. Our total of the trading account was rupees 1,76,000 and here it is the same 1,76,000. the total of the profit and loss account, our total was rupees 52,680 and here it is the same rupees 52,680. How do we calculate it? We always calculate, first we calculate the total and then we deduct the lesser or smaller size of the total from the bigger size of the total. How we get the gross profit? We get the gross profit by deducting the total of all the items of debit side from the total of all the items from credit side. Similarly, net profit, we get the net profit by deducting all the items of credit side of the debit side from all the items of the credit side. Okay. Next, in balance sheet, our total was rupees 1,87,265 and here it is same as given in the book. Okay. Our total capital for Shilpa after adding the net profit was rupees 60,732 and total capital of Katrina was rupees 59,733. Okay. So it means we have tallied the same, exactly the same as it is given in the book. Now let's see. What is the quiz of day 11? See, if new percentage RDD, reserve for doubtful debts, is asked to be calculated in the problem, then how it is calculated, how it is recorded? If it is asked in the adjustment to calculate percentage RDD, then how it is recorded? Whether it is added to the RDD to the Sundry debtors, whether it is deducted percentage RDD from Sundry debtors, whether added percentage RDD to Sundry debtors after doing all adjustments, or it is deducted percentage RDD from Sundry debtors after doing all adjustments. Okay, read the question properly, read the answers options properly and then give the correct answer immediately. What we'll see in our next lecture, what we'll learn in our next lecture, that is partnership final accounts illustration number 3. That is which is given from page number 29 to 31. Thank you.